What I want to start off with is my latest, greatest favourite video clip. Some of you might have seen it if you were here last year for our little seminar. This is an overlap of what Craig did. So in the 1970s, Australian TV produced a series called, a drama series called Power Without Glory, which is based on the book by the same name, which is a fictionalisation of a true story and the life of the shady character John Wren. Anyway, because there's an overlap, if you remember from Craig's class, between Wren and Ted Theodore, this is the scene from the movie where they dramatise the cabinet meeting where Theodore is arguing out his policy of a fiduciary note issue. So the characters are not named properly, because that's the way the author, Frank Hardy, wrote the story. He didn't want to use their real names, but he came pretty close. So you're going to see Ted Thurgood is Ted Theodore, Frank Ashton, the old white-haired man, is Frank Anstey, and Joe Ligon is Joe Lyons. And the Scullin is sitting at the end of the table as the Premier. So hit play, please, Doug.
You can blame the nationalists if you like, but it won't make any difference to the public out there. And it won't get the country out of debt. Now, the fact is, Australia's been living beyond its means. We've got much too high a deficit. We're down on our balance of payments to the tune of,
The latest figure is £193 million.
Oh, that's terrible.
And our credit rating overseas is falling all the time.
Now, we've heard all this, Joe. Get to the point.
Come on.
Let Mr. Ligon speak. Now the rest of you have had your say.
Well, the point is that we're going bankrupt. The talk at this time about spending more money,
I'm talking about issuing it, not spending it.
I fail to see the difference.
There's a very big one.
Ask anyone in business.
You ask them. You got more friends there.
Settle down, Frank, please.
I was about to say, ask anyone in business and they'll tell you that if they ran their enterprises on the basis of spending money they haven't got, they wouldn't just end up bankrupt. They'd be prosecuted for fraud.
Well, look, we're not running a business. We're running a country. And that's rather more complex. Too complex for you to understand, apparently.
Well, the same rules apply.
No.
It's plain common sense.
You must not have a fiduciary issue.
All right. But just exactly what are you proposing, Joe?
Economies. Try to bolster our gold reserves. And I think we should postpone our plans on social services. The government's got to set an example. We won't get back on our feet without tightening our belts.
Plenty of room for you to tighten yours, brother. The bloke in the street's down to his last notch now. There's thousands of them out of work. The men who put us here. The banks are squeezing them. The employers are squeezing them. Big business. We should be stopping it. They're crying out to us to protect them. Do you want us to squeeze them as well?
We're not helping them by living in a dream world. We must face facts.
Look, there's nothing fairy tale about a fiduciary issue. Now, I'll spell it out again because I don't think everyone around this table's understood it. 1, we expand the note issue by £18 million. 2, a third of the money goes to help the farmers. 3, the rest of the money is deployed to create new jobs. Now, 4, new jobs means increased production, and increased production equals real wealth. In other words, in a few months, the fiduciary issue will no longer be fiduciary. It'll be backed by real productivity.
Well, if it's that simple, if it's that sure a thing, why are our bankers all opposed to it?
Because like you, if you'll excuse my saying so, they know all about running a business. They know next to nothing about running a country.
Okay. So we're going to look at this question of what does happen in a war. Craig's touched on it a bit, overlap from the actual credit creation side. But before that, the clip you've just watched was this very well written dramatisation of that, of the essence of Theodore's plan, and I was pretty impressed that whatever you call Hollywood in Australia was understood the concept well enough to write that. You know, and especially this idea that they know about running a business, but they know next to nothing about running a country, because that is one way of putting what the essence of the issue is. They're totally different propositions. Now, of course, Craig's given you the rundown on what the consequences were. There was a political blowback, though. In 1935, the United Australia Party government of Prime Minister Lyons and the Deputy Prime Minister Menzies had to respond to the rage in the population, the backlash against what had happened, because there was so much emphasis on banking. Banking was a topic of hot debate in the community as a consequence of the Depression, but also, if you're thinking about the dates, it was obviously influenced by Australians looking at what Roosevelt had started doing in the United States, right? With the New Deal and the Reconstruction Finance Corporation, he had started doing what Theodore had advocated doing here. And on this Keynes question, might I remind everybody, because there is this blanket credit to Keynes for anyone who advocates expanding currency. Well, Keynes' books were only just starting to come online. Theodore had his ideas beforehand. Roosevelt had his ideas beforehand. And remember the King O'Malley quote I gave you guys this morning from 1909 in the Federal Parliament, where King O'Malley laid it out, right? So Keynes was, Keynes deserves very little of the credit he's given. Roosevelt had been able to start implementing this program, and here's Australians watching the New Deal being wheeled out and thinking that's what we were going to do, right? And we were told that's unsound finance and we couldn't do it. So this led to a real stink, and in response to the turmoil, a Royal Commission was appointed into banking and finance in 1935, which met over 1936 and handed down a report in 1937. And interestingly, one of the members of that Royal Commission was Ben Chifley. Ben Chifley had lost his seat in the Federal Parliament in the previous election, so he was unemployed for a little while, but he'd already started building a reputation by then, and he was on that Royal Commission. So he got to participate with this fairly exhaustive process of raking over the coals of the Great Depression to see exactly what happened, what hadn't happened. And Chifley, of course, had the vantage point where he had for a time been the assistant treasurer to Theodore in the Scullin government, right? So he could see, he knew from that side what Theodore was trying to do, and so he was now on the Royal Commission adjudicating what went wrong and what went right. That Royal Commission was, apart from Chifley, the rest were Conservative members, typical government appointees. So it was not a tool of a Labor administration. With that in mind, its findings were fascinating. Next slide, please. This is what it recommended. It required trading banks to keep minimum deposits at the Commonwealth Bank. That is the reserve, that's the fourth plank of O'Malley's original plan, right? That's what the Royal Commission recommended. Legislate to control the profits of the trading banks and disclose their reserves. Establish a division of the bank for mortgages and for financing small industry. That's important because that's part of the general banking function of the Commonwealth Bank, which was one of the criticisms of the private banks. They said we shouldn't have to compete with a government institution. From 1924 onward, that side of the Commonwealth banking business had become less and less because the Commonwealth Bank was governed by private bankers, and they made sure they didn't have to compete with it. The Royal Commission itself, this is not Chifley's recommendations, this is the full board's recommendations, that those parts of the banking function should be allowed to be expanded. Maintain the trading bank and savings bank divisions. Make the governor the chairman of the board. Now this is also significant. This is not going so far as to go back to a single governor as it had operated under with Sir Denison Miller, and who was, his replacement by a board was a way of neutralising the bank, but it's going halfway there. The Royal Commission recognised that the governor should have a lot of say over the bank and not have to answer to this private board for everything he does, which is therefore there to keep a check on him, right? compulsory monthly statistics for full information, a statutory limit on the note issue with a limited power to increase it with the approval of the Treasurer. That's significant. If I can translate, what that meant was the 25% in gold that Craig had talked about, all money lending had to be backed by 25% in gold. That was a limitation on the note issue from 1924 onwards. For every £10 issued into the economy, £2.50 had to be on hand in gold. That's what limited the note issue. So, of course, the cause of the Depression in Australia was partly the British, through their gold standard globally and control of the world's gold supply, drawing gold out of Australia, which collapsed the currency in circulation. So what the Royal Commission was saying is we should get rid of that system of tying it to gold, and don't do it willy-nilly, don't just take the brakes off entirely, have a limit on how much can be put out, but also have flexibility that the Treasurer can decide to increase it by. The Royal Commission said the most desirable banking system for Australia included private banks with a strong central bank, publicly owned, exercising the necessary control over the private banks. So by this time, a lot had changed since O'Malley's days, where you've now got a Royal Commission dominated by conservative political figures advocating in its findings everything O'Malley advocated. Right? This is quite important. And then this was the key principle handed down by this Royal Commission. And as I read it, remember that William Gladstone quote from this morning. In the event of a disagreement between the government and the bank, quote, the government should give the bank an assurance that it accepted full responsibility for the proposed policy and is in a position to take and will take any action necessary to implement it. It is then the duty of the bank to accept this assurance and to carry out the policy of the government. And later, in another place, the Royal Commission said, the government is the ultimate authority over the financial system. So the end result of this terrible period in Australian history of the Great Depression was the Australian people, and if the Royal Commission reflected the general population, it must have been rather broad, came to an understanding that, hang on, in the financial system, we do expect the government to be in charge. And the Royal Commission laid this down in black and white in its recommendations. The government is the authority. So that definition of the British system that Gladstone said was, where the money power was to be left supreme and unquestioned, that had been thrown out entirely. Well, not entirely, of course, because Menzies and Lyons were still in government when this was handed down. Before I go to that, Chifley, just go to the next slide. Chifley wrote a dissenting opinion as a board member, which is in the Royal Commission's final printout. He only dissented on the question of, do we need private banks? Quote, the Commission had expressed, this is not his quote, it's a quote from a book writing about this. The Commission had expressed its approval of a system of private banks controlled by a strong central bank, and Mr. Chifley had collaborated in devising means to make this system work as well as possible. So he had full input into what the Commission handed down in its recommendations. But he wanted to take issue on this one question. He did not, however, think that the best possible under the system could be satisfactory. Quote, the possibility of well-ordered progress, quote, was incompatible with banks working for profit. At times they might respond to the public interest, but in the long run their aim must be profit. Banking entered too vitally into every phase of community life for its activities to be left to the dictation of profits or of prestige which would lead to future profits. All banking, therefore, should be publicly owned and controlled. Now, Chifley, the way he expressed it, he compared banking to utilities like electricity, gas and water. And his argument was, those are the daily necessities of life. We do not accept those to be run for profit by private interests, right? They are there to be supplied for the people's needs. Credit is more important to the economy even than those individually, the role it has. Therefore, we should regard credit the way we regard a utility. And you can see he's reacting to the actual experiences of government. You know, this is 1936. Australia had a federal government for 36 years, right? We need to regard it that way, and therefore that justifies his view that you shouldn't even have private banks. But that was a dissenting opinion. He had done his best as part of the majority to make recommendations to make the banking system work well anyway. That's important. All right. So that's the Royal Commission on Banking, and the principle it handed down is that the government should be the ultimate authority. That was the revolutionary part of it. You may.
Sorry. Since it was a Royal Commission, you'd expect that they'd have British lackeys there like the Governor-General or others, royal toadies. Why didn't they win over?
No. Well, Royal Commissions don't work that way. It just means that it's a commission of inquiry with the widest possible powers. That's why it's called a Royal Commission. It doesn't mean that the royal family convene it or oversee it, etc. It just that Royal Commission term goes back, centuries into, okay, we're going to have if the King calls an investigation to something, then we're going to have a Royal Commission. So governments could call that. That being said, of course, there would have been. But that's what made these recommendations so important. Because this was not Labor people stacking a commission to come up with their own answers, right? This was bankers and economists, etc. But they had to be, they couldn't pretend the Great Depression hadn't happened. They couldn't pretend that the Premier's plan hadn't made it worse. And they couldn't pretend that what Roosevelt was doing in America wasn't happening, right? So you see this often when you do the history research, especially into Australia, which we tend to do eras when we get around to it. We'll focus on one era and do it quite thoroughly. And when you see quite often how the British will be a bit chameleon-like in the way they're treating Australia, because they can never afford to be totally dictatorial and give away the fact that they are the ultimate power. All right? They want people to think, no, we're in charge of ourselves. We're running our own affairs. When, of course, we've got the Crown in the background here, So what they'll do is they'll let out a bit of slack every now and then. But in this case, you've got a commission. They've got all the different backgrounds you'd expect. Most of them are conservative. Most of them are non-Labor. But this is what they recommend, right? So it's quite it's a key part of Australia's economic history, this Royal Commission, and it lays down the principles that we are advocating today. CEC policy is saying let's implement part of the principle of the 1936 Royal Commission. All right, in 1930. Oh, by the way, feel free to ask me questions as we go through, because this is the last panel, so we may as well. Yeah. Okay. You can read in our history research in 1937. They hand down the findings in 1937. This is the Royal Commission that Lyons and Menzies had appointed. They set this Royal Commission up. It hands down its findings with all these recommendations, but Lyons and Menzies then don't do anything with them. They prepare a bill that gets introduced into Parliament for a second reading, and then it just sits there. They do not act on this Royal Commission because they don't want to, right? This is Menzies, and I wish I had the picture. It's in the Synergy New Citizen, but this is Menzies, the bum buddy, and that's not. I reckon that's probably literal, of Staniforth Rickerton, the WWII guy, from who was Australia's the guy who liaised between Australia and London. And if some of you might have been in presentations we did from years ago on this, where there's a really great letter you see where Menzies writes to Staniforth, "My dear Stan," and he goes on, and we had a great time at Mount Macedon the other week. Really missed you, buddy. Blah blah blah. So they obviously the banking fraternity in Australia did not like this Royal Commission, but it wasn't a Labor Royal Commission, so their opposition to it really showed them up, right? So they don't implement it. It doesn't get implemented until 1941. Next slide, please. And these are the two key people. Now, we'll go through World War II a little bit, but I want to make this point. The 3 years of World War II, in my estimation, from what I can tell, the 3 years of World War II is the one period in Australia where we had the benefit of a fully empowered American-style King O'Malley design national bank. The 3 years of World War II. Sorry, not the 3 years of World War II. The 3 years these guys were in charge in World War II. 42, 43, sorry, that's 4 years, isn't it? 42, 43, 44 and 45. They take power in 1941. What's the next slide? I didn't write it down. Okay. Just go back before I introduce that. They had pushed from 1937 to 1941 for the Royal Commission to be implemented. Right? That had become part of Labor's platform. This is a Royal Commission, its findings should be implemented, but they'd been ignored. So as soon as they take power, and if you know the circumstances, Menzies was on the nose. He'd spent all his time over in England trying to become displaced. You know, people had whispered in his ear, hey, you should be our Prime Minister instead of that fat bulldog-looking guy. And it got to Menzies' head. He actually collaborated with actual Syndicus over there in a vain attempt to think he was going to become the Prime Minister of the Dominions, the whole kit and caboodle, Prime Minister of Great Britain. So he was so busy doing that and being totally self-obsessed that public opinion really turned against him in Australia. He had to stand down. He was replaced temporarily with Arthur Fadden, and then two independents over the wheat issue, over the question of Australia's wheat farmers, two independents switched sides from the Conservatives to Labor, and Labor was back in power, but under these two. And these two were really, really close. You know, we've talked about Curtin a lot. Curtin was a really genuinely great person who surmounted enormous personal difficulties to take the leadership role he did. He had a perfectly balanced relationship with Chifley because Chifley was a really strong character and a really smart character, right? And the two of them, in fact, they were so close that Menzies, when he was going to become opposition leader, would not take the job unless Chifley became his deputy, right? So the two of them have to be seen as sort of a single unity when it comes to their role. Did I say Menzies? Yeah, sorry, Curtin. Yeah, let's give me an exorcism. Curtin refused to take the job unless Chifley became his deputy. Right? He wanted Chifley at his side, and they worked brilliantly together. So the Commonwealth Bank didn't just become that fully empowered bank. It took charge of the private banks. It made them put their deposits in the Commonwealth Bank, their reserve deposits, so that the Commonwealth Bank could take control over their lending. Just before it happened, this is a real giveaway. Just after Menzies quit, and he was for about a month, this Queenslander, Arthur Fadden, was the Prime Minister. The private banks must have seen the writing on the wall that the Liberals would not be, the United Australia Party wouldn't be in power very long. So they sought out Arthur Fadden and they gave him an undertaking as the Prime Minister. And Arthur Fadden read it into Parliament what the private banks promised. Now this is October 1941. So Menzies had declared war in 1939, right? In October 1941, the private banks promised then, 2 years into the war, quote, "The trading banks have no intention and no desire to make excess profits arising from war conditions. As a wartime measure, and with the object of ensuring that additions to their funds owing to war conditions will not be used to make excess profits or to expand advances in any way contrary to the national interest, they agree to place all surplus investable funds accruing in their hands on deposit with the Commonwealth Bank as special wartime deposits, and agree to the Commonwealth Bank making appropriate variations in the rate of interest thereon to ensure that no excess war profits arise. End quote. So this is 2 years in, right? It's all they're offering is what the Royal Commission said 3 years earlier. That should have been the case. They hadn't bothered to do anything. They hadn't been made to do anything. They hadn't bothered to do anything for 2 years of the war. Now they're offering it? Why? And I got that quote from Menzies himself later on in a debate in 1945. He read it out because he was reading it out in Parliament, and he whined. He goes, "I point out that no opportunity was given for that voluntary scheme to work. Compulsion was at once brought in by the present government. Boo-hoo-hoo. You know, we should have taken the banks on their word, right? What? And Menzies is hand on heart. Why do we have to compel the banks to do these things? They're good people." Anyway, so next slide, please. Instantly, Curtin and Chifley take over. The Commonwealth Bank starts creating credit on an unprecedented scale. So check out this question of Treasury bills. I'll just explain Treasury bills. A Treasury bill is where the Treasury authorises a borrowing, right, from the central bank, from the Commonwealth Bank in this case. So the bank creates a credit to the Treasury in exchange for a bill from the Treasury. So they've created money and the government gets to spend that money. But against that Treasury bill from the government, the bank can lend out into the private sector as well. So the central bank gets to draw 2 lots of repayments and interests from one creation of money. And the actual creation is the money they give to the government, right? Now this is the power that all central banks around the world utilise all the time. But there's 2 general motivations for it. There's nothing stopping, this is the way the system works, there is nothing stopping any government from saying to its central bank, we want to borrow this money and we're going to use it for this project. But they don't. The way it's used on a daily, weekly, monthly, yearly basis now, and for most of the time of its existence, is purely for budgetary financing. And the way that works is if the government runs a deficit, the central bank, the Treasury will try and finance that deficit from borrowings from the community, from the private sector, from issuing bonds, etc. But say the deficit's, what's Swanee's? 19 billion, right? The government might get only 17 billion in loans. And only then will it top up the difference with this Treasury financing. But then when there's a surplus, they automatically reverse it and contract the money supply with the government surplus. They repay it back and they shrink the money supply. That's why there's pluses and minuses here. So look at these figures and 1933 is the height of the Great Depression, right? So look at Treasury financing and think about Craig's graph, Treasury bill financing. So from 1933 to 1941, and that's 39, 40 and 41 is the war years, right? The aggregate increase is only £5 million. And then look at the war years, instantly. 43, 44 and 45, right? They didn't have to reinvent the wheel. They didn't have to come up with any new kind of system. They didn't have to go to South America and plunder it for gold and bring gold back to say, oh, we've got this gold now, we can finance a war. They had this mechanism, bang, turn it on. Right? And they could do that tomorrow, and they could do that anytime they want. In fact, quantitative easing means they are doing it. Central banks are now doing it all the time, but they're not doing it with any kind of, they're not mobilising for anything, they're just propping up a system now. Right? But this is a power the banking system has always had. It's just, this really reinforces the point about when war, because you've got to think about the politics of war. In the politics of war, no one questions the right of a government to be a government, right? Everyone understands what the general welfare means. Everyone understands what national security is. And so the banks went to ground. They already saw the writing on the wall, which is why they sucked up to Fadden saying, oh, let's make these voluntary offers. And Curtin and Chifley were too smart for that. Get in, bang, whack it in straight away, here's what's going to happen, and this starts immediately. So this had an instant effect. Menzies, the effect it had straight away was on Australia's economic mobilisation. I don't want to go through too much on Australia's economic mobilisation, but I want to go through one part that's relevant to seeing how the mobilisation coincided with this expansion of credit. Menzies had appointed Essington Lewis, if you know the story, he was the Director of Munitions, right? Did a brilliant job. He appointed him in May 1940. His secretary, Lewis's secretary, had recommended that Lewis sets up this board of directors to manage the different parts of supply for the war. And he did that. And it was all Lewis's appointments were brilliant. And Lewis chose, as his Director of Labour, Ben Chifley. So from June 1940, Ben Chifley is one of those 8-man board of directors working with Essington Lewis to plan Australia's wartime mobilisation. So these guys were serious. They had a list of what Australia needed. How do we do it? Right? They got stuck into it straight away. But they can't do more than the money's available, and this tap of Treasury bill credit hadn't been turned on yet. And you see it in the fact that the response, as good as they were, I'm sure those guys were doing brilliantly, but the initial start-up of the mobilisation was quite slow. And obviously that reflects on the Menzies government, because part of the Menzies government's whole, raison d'etre was their opposition to credit. So here's a key date. By March 1942, Labor had only been in power a few months. They came into power late October 1941, right? So 5 months later. March 1942 was when General Douglas MacArthur arrived in Australia. And the reason that's important is because later on after the war, when he was writing his memoirs, he recorded his experience landing in Australia, because Curtin brought him here to help to run the Pacific War from Australia. He was shocked by how unprepared Australia was for war. This is March 1942. So Lewis and this great group of guys had been doing their job for 2 years. Right? Lewis was appointed in March 1940. They'd been operating for 2 years. And 2 years later, MacArthur was that shocked by how unprepared Australia was. He said in his memoirs, he said, quote, "It was the greatest shock of the war." But the next 3 years, Australia transformed itself. And if we could, the speed with which we transformed itself with this credit, if it had been in use all the time, MacArthur wouldn't have had that shock. Right? Didn't take us long to start turning things around. And remember, here's the other important thing to note, that the man who became Treasurer in October 1941 was the Director of Labour on the Director General of Munitions, Ben Chifley. So you can imagine how frustrated he'd probably been for a couple of years. D.P. Maller reports in The Role of Science and Industry, quote, "The years 1942 and 1943 witnessed an astonishing increase in the number and variety of locally made machine tools." Just before I keep reading, they'd ordered those machine tools in 1940. At the peak of production in 1943, some 200 manufacturers employed 12,000 persons for an annual output of 14,000 machine tools. By the middle of 1944, what had been Australia's greatest single technological weakness had become a major source of strength. And the overall mobilisation was just stunning. We've done presentations on it, it's in our publications, but the other thing that World War II did, from a general standpoint, is it turned us from being an agrarian economy that was really dependent on wheat and wool to, and not just an industrial economy, an advanced industrial economy. Right? That was 3 years. That's all it took. In the conditions of war, 3 years, we just transformed completely. Now, the other notable thing about the wartime mobilisation was this. There was virtually no wartime inflation. And that's quite stunning because wars and inflation tend to go hand in hand. Right? But that's because of the controls of banking. I'll just explain that briefly. The people running Australia's credit, they knew there is a constraint to issuing credit. And Who knows what that constraint is?
It's the manpower that you can...
Exactly. You cannot, if you issue more credit than you have manpower and materials and resources to utilise, then, you know, you're going to cause problems for yourself, right? So that's just a fact. And so, you know, that's why you want a government that knows what they're doing. So that's the constraint. So what the Labor Party had to do, what the government had to do, is get this credit expanding. By the way, look, if you compare those figures to Craig's graph of the total expenditure, the actual created credit is a small part of the expenditure. The expenditure was in the 600 and 700 million pounds. We're only creating, what's the most there? 170 odd at the peak, right? Because the government also had to encourage the population to put money into loans, and that's what the famous John Curtin footage is about. Fill the loan, fill the loan. And the reason they've got to do that is because they couldn't afford to have the population with too much spare cash in their pockets. Because if they've got too much spare cash in their pockets, they'd want to spend stuff, but everything's got to be earmarked for war, right? The war production has to come first. We're fighting for our own existence here. And so that, apart from price controls, the way to keep the population from spending prices up was to, you know, encourage ways to get the money out of their pockets. And one of those was lend it to us, the government. So they heavily borrowed, partly for that reason, partly because they needed it, but partly for that reason. They also heavily taxed, very heavily taxed. The taxation rates in World War II for most countries were through the roof. And in fact, I think the top rate got up to 90%, right? But you had no money, you had nothing to spend it on anyway, right? Everything was rationed. But you could only, it worked like a well-oiled machine, right? You could only do it because the Commonwealth Bank took charge of the whole process. You know, the financial system was run, you know, for the public good and the national interest in mind. So the war showed that this system works, right? There was no question, because there was a war, no one quibbled, let's go and do it, right? The national interest reigned supreme. So in March 1945, Ben Chifley introduced a bill into the Commonwealth Parliament called the Commonwealth Bank Bill to make this structure permanent. And most of what he introduced was just the 1936 Royal Commission recommendations. Most, with one exception. Next slide, please. Okay. Quote, this is what Chifley said, "The legislation that I am proposing today is based on the conviction that the government must accept responsibility for the economic condition of the nation. Accordingly, the government has decided to assume the powers which are necessary over banking policy to assist it in maintaining national economic health and prosperity." And his bill, the specifics, he's aimed to strengthen the central banking functions of the Commonwealth Bank, which is mandatory special accounts, the thing that the Royal Commission called for, by making the private banks keep a deposit in the central bank gets to control what they lend, the volume that they lend. If they're lending too much into a bubble, under this system you never would have had the property bubble of the last decade, right? Because the banks, they've gone binging in it. They ran out of money to lend and they borrowed overseas to lend into it, right? The central bank would never have let them do that under this system, you know, with a proper government in charge of it. To ensure that monetary and banking policy of the Commonwealth Bank shall be in harmony with the main decisions of government policy and in the interests of the people of Australia. That's the 1936 Royal Commission. To ensure the development and expansion of its general banking business by active competition with the trading banks. That's the 1936 Royal Commission. To assist the control of the Commonwealth Bank to the governor, to return the control of the Commonwealth Bank to the governor, who will be assisted by an advisory council. That's the only thing where Chifley went further than the 1936 Royal Commission. And all he did was want to go back to the original Commonwealth Bank Charter. That's all he wanted. That's all that was about, right? Scrap the private board idea. Let's go back to that. To assist in developing small industries and enabling the people to secure homes. Also, abolish the board control of the note issue, and abolish the currency reserve requirement of 25% in gold and silver, which is the 1936 Royal Commission, except Chifley wasn't that worried about having a statutory limit on it either. Chifley said, quote, reduced to its simplest terms, one of the main responsibilities of a central bank is to control the issue of bank credit by all the banks in such a manner as to avoid expansion of credit in times of boom and contraction of credit in times of depression. And that little quote there is what he wrote in his opinion in the 1936 Royal Commission. Right? So none of this was unforeseen. None of this was that radical, really. None of it was revolutionary. It was just way beyond due. And for the 3 years before he tabled this, that's exactly how Australia had functioned perfectly. Right? He had just proved it worked. And he wasn't, in this bill, he wasn't proposing to do in peacetime, in terms of power, what hadn't been done in war. Right? But it sent the bankers into conniptions, led by Stan's buddy, Robert Menzies. So if you read the parliamentary debates about this, Menzies' reactions really tells you, you know, how the bankers think about things. Do I have those? Just go to the next slide. Oh, well, that's the gang of thieves who ran Australia's financial system, and they got together to say, what are we going to do about this? They weren't happy. Next one. All right, go back. I'll just read you some of these quotes from Menzies. In reaction to the idea of stronger central banking powers through mandatory reserves in special accounts, quote, if the control of credit is the dominant purpose of requiring deposits by the trading banks, the question then arises, is such a system of variable deposits a better method of achieving credit control than that employed by the Bank of England, which is still the greatest and most successful central bank? It operates entirely in cooperation with the trading banks, and it uses principally, as it can in London, the method of the bank rate and open market operations. We should think carefully before we introduce methods of authority and compulsion which we have never fully tried out the method of cooperation and leadership which has achieved such amazing results in Great Britain, end quote. So first of all, he's all for cooperation with the central banks, with the banks, now that they're on their knees in front of the government. Go back to 1930 and 1931 with Theodore. He wasn't for cooperation with the banks then. He was for the government to get on its knees in front of those banks, right? So, you know, the second incarnation of Menzies, you know, because he was Prime Minister twice. His political career should have been destroyed after the first time, but they repackaged him. And he came back and it was, hand on heart stuff. And now it's like, we should be working together. This is all about freedom and democracy and et cetera, et cetera. And let's not remember the past. And when you read the debates, those Labor guys in Parliament, because the past wasn't that long before these debates, right? That was all in their minds and they're interjecting mercilessly. Right, and they're giving him curry. It was really funny. What he's saying, though, in that quote I just read out is this. Here's the Bank of England. It doesn't have this authority over the banks. Well, yeah, for one good reason. If you know the story, the Bank of England has its authority over the British government. And it has had since 1688 or 1694 when it was set up. That's where its authority lies. It controls their debt, and through that it controls the whole system. Secondarily, his point is it uses market operations. You know, it operates through the markets, so it achieves its expansion and contraction of credit indirectly. Whereas what you're asking to do is direct government action. And of course, by definition, that has to be bad. Right? Markets have to reign supreme. That's effectively what he's saying. He was hysterically opposed to the idea of the bank governor becoming accountable to the treasurer. And he said this, quote, I am not prepared to accept a state of affairs in which the executive of its own force is able to override a central bank on matters of great moment. You know, who do we think we are? We elected government of the people. And he effectively threatened, in this same speech, he effectively threatened the retaliation of the money power, but in a nice way. He goes, quote, if anyone supposes that in an atmosphere of hostility, in which the private banks and the central bank are at arm's length, any good purpose for Australia can be achieved, I beg him to forget it. We can get good results for this country only by the utmost cooperation and understanding. Therefore, every endeavour should be made to produce understanding, and there should be as little insistence as possible on the weapon of coercion. Legislation, right? I say by way of warning to my honourable friends on the other side that this is the threat, although they may think that political control of this bank is a fine thing when they are in office, they will not always be in office. In fact, they will not be in office very long, and I venture to believe that when they, or those who are left of them, are sitting on the left-handed side of the chair in this chamber, they will curse the day when they made the central bank a mere fluttering political instrument. End quote. Now, I was thinking about this question of Menzies being so obsessed with the idea that government control of the bank is a bad thing. But what it does reflect is his own born-to-rule mentality. And of all the Prime Ministers, apart from probably the only guy who could rival him for this mentality was Stanley Melbourne Bruce, right? But these Tories, to them democracy doesn't come into it. When they're in power, they don't think of themselves as they're representing the people. They're born to rule. And I'm sure they therefore don't automatically assume the other side is representing the people either, right? They just see it in their terms through their perspective, and they can't see it in any other way, because what is this government control? The government is the people. When the government's in charge of the banking system, it means the people's in charge of the banking system. Did anyone really buy the argument that when we sold the Commonwealth Bank and sold Telstra, that, you know, as the people we owned it, but now we own it through our shares? Do we all fall for that argument? A lot of people did, right? We're now all shareholders in Telstra. Well, we're not, but we were all shareholders once before, but they, that doesn't fit into their worldview. All right. So this bill passed the Parliament. The Chifley Curtin government was very, very popular. They really, I think what happened in World War II is you had the two best possible people running Australia, right? John Curtin and Ben Chifley. And Curtin, more than anybody else, if you remember Noel's quote yesterday, he epitomised this idea of being there for the common good. He was the least ambitious person to ever become Prime Minister of Australia, John Curtin. He did it out of responsibility, and it worked. And as I said, he only did it because he knew Chifley had his back, so they had the capabilities to do the job, because I'm sure he saw it as a capability question. So this passed, they had the public support, and they passed it. However, Menzies' buddies in the banks sprang a trap, because one of the parts of this law said that every government agency in Australia had to bank with a government bank. And so the Melbourne City Council took this law to the High Court, and they got it overturned, because their argument was, well, there's no state bank in Victoria, there's only the Commonwealth Bank, this means we can only bank with one bank. And the government was going, yeah, so? Right, who else do you want to bank with? Well, they were the Melbourne City Council, right? They were around the corner from Collins Street. That's who they felt they had to bank with. So the stupid idiots in the High Court upheld this point, and it was in response to that Chifley said, as a matter of principle, all right, that's it. We do not accept that any level of government that has any responsibility to the population should bank with anything other than the government bank. We regard this as a principle, so we're going for full nationalisation. Now, nationalisation had been the Labor Party's platform all along, but had never seriously been pursued. Chifley had said in 1937 this is what he preferred, sure, but here's a workable system. And it wasn't in his 1945 legislation and that 1945 legislation was during the war. The war hadn't ended in March 1945 when the Commonwealth Bank Act was put in place. If they wanted full nationalisation in the best possible circumstances, they could have gone for it then, right? It was not the government's first choice. They wanted a functioning banking system as their first choice. They only went for nationalisation when they got forced into it, and of course that ended up being overturned by the High Court, and then the overturning was upheld by the Privy Council in London. Next one, please. All right. Now, bear with me. I'm going to now make a criticism of Ben Chifley. If there's one criticism, it's this. Have a look at those figures on the board. What do you notice? If Ben Chifley had a weakness, it was towards the British. You know, well, I mean, we've seen it, we in the CEC see it all the time, which is the reason why we go aggressively on this British question, right? Because you cannot, history shows you're not going to run a monetary system that benefits the people without entering into what you must understand is a life and death battle for that system. Because what you're taking away is not the profits of the private banks. You're giving them damn profits. What you're taking away is their power. And by taking away the power base of the private banking system, you are taking away the British Empire's power base, right? But you have to see it that way. You've got to, unless you see it the way, and the person who saw it that way the most clearly was Frank Anstey, without a doubt. You know, you can read Frank Anstey on that. And of course, I do wonder if the problems that Chifley created after World War II, because of his weakness towards the British, was also because Curtin had died. Because together they were dynamite. Now, you know, and perhaps Curtin relied on Chifley more than Chifley potentially relied on Curtin, but in terms of a moral authority, he probably relied on Curtin quite a lot. Because Curtin was the protege of Frank Anstey, right? Because what Chifley did, because of his weakness on the British, he was a very, very conservative person when it came to money. Now, that's not a bad thing, but, you know, come on, you can't always be a tight ass. And the war was over. Now, there's a... We've wondered about this particular issue for a long time, because what I'm about to paint is the picture of why Labor lost office. They lost office because those controls to keep production at its peak and to keep inflation low during the war, they kept them on after the war. But the war was over. And they kept on things like really, really inconvenient ones like petrol rationing. That's the one that really got up people's noses, the petrol rationing after World War II. Come on, this bloody war's over. And so recently, though, the LaRouche Pack guys produced a video on the Bretton Woods system where all of a sudden some of the pieces started to fall into place. Because you have to see this in the context of geopolitics at the time. This is not about the Bretton Woods system, but the Bretton Woods system by intention was a Roosevelt creation, except Roosevelt himself didn't live to see it through to fruition, but he'd set it into place. So the final Bretton Woods agreements in 1944 were very good, and 1945 were very good agreements. But what it did was it created a stable financial structure for the world for the post-war recovery, and the stability was in currencies, and not based on gold, which gave the British power, but based on currencies fixed to the US dollar and the US dollar fixed to gold. But the US dollar was the reserve currency. And the Brits didn't like the Bretton Woods system ever. They were opposed to it from the beginning. And they saw it in the terms of when Roosevelt and, what's his name? Winston Churchill had their discussions all through the war. Roosevelt never missed an opportunity to make Churchill give up something in exchange for US help during the war. And Churchill had to give up things like the preferential trading arrangements to the Commonwealth countries and things like that. Because what Roosevelt was doing was picking away at the British Empire, right? Now Roosevelt, we know Roosevelt. Roosevelt was not doing it so America could replace the British as the world's empire. That's not what was in Roosevelt's mind. It was the opposite. Unfortunately, the Americans who followed Roosevelt, plenty of them saw it that way. But the Brits had not liked the Bretton Woods system. the US dollar was the reserve currency, the sterling was the second reserve currency, right? They didn't like being second, but it was important that the sterling remained stable. The British, after World War II, suppressed their own economy in order to create the circumstances where they could force a devaluation of the sterling. And that devaluation came in 1949. Now, the Bretton Woods agreements had allowed for devaluations because you've got to have a little bit of flexibility, but that allowed for devaluations of like 2%, and if you got the agreement of 40% of the countries, you could devalue by 8%. In 1949, the Brits had so suppressed their economy and the living conditions in Britain were so bad, which was the reason Chifley said to Australians, we have to keep harsh conditions here to support the British economy. We have to keep rationing petrol here, right? We have to, yeah, we're supporting our, you know, they're going through a really hard time in Britain. I mean, one of the things the Brits were doing were foot dragging on the Marshall Plan, for example. This was a deliberate policy of suppressing their economy. So the 1949 came and they whacked in a devaluation of 30%. To create a real ripple in the structure of the Bretton, you know, instead of just a little ripple like this in the stability of the Bretton Woods system, it was like this. Because they wanted to create the circumstances where private banks could start speculating on all the turmoil and all that. That's what this was, a deliberate policy. And not only did Chifley play a role in supporting, in making Australians sort of extend their tough economic conditions to support. I mean, Australians were happy in one sense, you know, the idea, they didn't quibble about the idea they were supporting the poor people of England, but it was for a fraud, it was a ruse. Not only did Chifley do that, he actually made sure that the pound sterling in Australia was also devalued by the 30%, right? So this was not a good idea. It was not a good idea at all, but who knows why? And you know, so I'm raising something like the Lang Theodore thing, which is a little bit inexplicable. Who knows why? Some of Chifley's fellow ministers in the government had opinions. One of them complained about how hard, because Chifley was treasurer, all the while he was prime minister, he kept the power over the purse. And one of them said, when he was complaining about how hard it was to get money out of Chifley, he said, you'd think it was his own. I mean, it's government money. Let me spend it on something. But this was part of the issue as well. So this is what Cairns said, because the thing about Cairns is he was the next, the second next person to become a Labor treasurer after Chifley, because Labor was out of. And Cairns, let me assure you, because I knew him. Cairns' all-time greatest hero was Ben Chifley. This would have been hard for him to write. But if you see the tone here, I'll read it out. He's just discovered this. As the guy who was just been kicked out of being Treasurer of Australia, he's just discovered this, and it blew him away. A net decline of £71 million in less than 5 years under a Labor government. The extent to which the conservatism of the Chifley government between 46 and 49 led to its defeat has never been realised, let alone emphasised. This completely negative attitude to control of bank funds, even in the face of popular post-war reconstruction needs, and the wage-resistant stand by the government not only took all the spirit out of post-war policy, but accentuated the shortages and restrictions which made Menzies in 49 look like a tremendous advocate of freedom and enterprise. And Cairns also lived through this. This is when he joined the Labor Party, and he was a cop and very smart guy all along. So he was shocked by this because, of course, from what we can tell, none of it was necessary, right? You could, the Australian people could have enjoyed much greater living standards straight away. Chifley got re-elected in 1947 on a landslide. Even despite this, right, at first, because the Australian people were willing to tolerate this for a little while, he got re-elected on a landslide. But he was out in 1949, and you've got to emphasise this period because with him went national banking, right? And Labor was out of office for the next 23 years. But before we get to that, despite this, you know, unfortunate aspect of his time, he did achieve great leaps forward in his time. He achieved it in terms of making the government responsible for the general welfare, putting in place permanent things that the government always had to keep going. He set up the National Welfare Fund, and some of you who are old enough might remember you paid, like with superannuation today, instead of paying to private investors, you paid to the government, you know, a percentage of your income, and that went to pay for the welfare bill for Australia. He set up the Commonwealth Employment Service and the Pharmaceutical Benefit Scheme. And of course, his great legacy was post-war reconstruction, notably the Snowy Mountain Scheme, which Menzies opposed, because he's a jerk, and to the extent where he didn't attend its opening, but later, the chameleon that he was, he had to reverse his opposition in the face of public opinion. Now, some of you may remember that when you got the invitation for this conference, the Snowy Mountain Scheme was on it, and it's not now. It was going to feature big time, but this is where there's no substitute for actual research, because some things you find out are myths. And one of the myths is that the Commonwealth Bank funded the Snowy Mountain Scheme, which it didn't, which is very unfortunate. However, it was supposed to. So the story is worth telling. Next slide. The legislation for the Snowy Mountain Scheme clearly provided that its construction was going to be done with national credit. And these are the three sub-clauses on the funding. Quote, the authority shall have power to borrow money on overdraft from the Commonwealth Bank of Australia upon the guarantee of the Treasurer. Before I go on, what's really important about that is not this automatic Treasury bill mechanism of filling a deficit. That is for a specific project, go and get the money, go and get the Commonwealth Bank to create the money for it. Right? It's very important. It's a much greater power, but it's got the power to do it. 2, the Treasurer may, out of monies appropriated by the Parliament for the purpose of this Act, make advances to the authority of such amounts and upon such terms as he thinks fit. 3, except with the consent of the Treasury, the authority shall not have power to borrow money otherwise than in accordance with this section. So this is going to be financed by credit, but only from the Commonwealth Bank. That's what the legislation said. And if anyone was unclear on that, because in parliamentary debates people debate the wording and stuff, what does this mean? What does that mean? In the 1949 parliamentary debates on this legislation, Kim Beazley Sr., who was in the Chifley government, he made it crystal clear that all three clauses, sub-clauses, meant that the funding was to come from the Commonwealth Bank, right? Cut and dried. And not 1 cent did. Despite the fact that this was a 25-year project that was built on time and on budget. I mean, its financing was somewhat brilliant anyway, but it was all paid out of general revenue, all of it, for 25 years. Not 1 cent came from the Commonwealth Bank. Now, if people are impressed that you didn't have to go into debt to build a project, well, that's pretty good. Well, no, it's not, because there was about 10 post-war reconstruction projects on the books. Only one got built, the Snowy Mountain Scheme. And that might have been able to be funded out of revenue, but there's no way all 10 would have been, right? Now, it wasn't the lack of revenue that didn't fund them. It's because Nugget Coombs made sure he stopped them and he bragged about it. But if Australia was reconstructed post-war the way it should have been, there's no way you could have done this. No way. It would have had to be done through national credit, right? So it's not a good thing that that was the case. And of course, it means that there was, I think, $800 million over 25 years the project cost. And that's money that, out of revenue that could have been spent on current expenses that it wasn't spent on, when this project could have been financed long term. And here's one of the quibbles that the Labor Party had when they weren't in office about it. Even though it was being funded out of general revenue, when Menzies came to power, he whacked a 5% interest rate on the money that the government gave to the Snowy Mountains Authority to build the project, saying you should at least be put under the conditions of private business conditions and pay interest on the money you're getting. Well, if they had borrowed from the Commonwealth Bank, they were prepared to pay interest, and they could have even paid less. You know, it was just ridiculous. There's a next one. There's a great quote here in the debate in 1952, just to see how clear that Labor's thinking was on this. The ALP's Charles Morgan, he said this in Parliament when they were arguing about the Snowy Mountain Scheme. If a factory owner wishes to extend his factory, a farmer to erect new farm buildings, or a worker to raise a home, he does not do so from current income. He raises a loan and pledges his future to repay the capital so raised. Surely the same principle can be applied to national construction, particularly in relation to such important developmental works as the Snowy Mountains hydroelectric scheme, which is of paramount importance to Australia. Surely that scheme could be financed by national credit and the resources of the Commonwealth Bank without recourse to current revenue. Work on the project could be speeded up considerably if such a project were adopted. That's because that's one of their criticisms, it was going too slow. We have been able to raise millions and even billions of pounds for war purposes. Why cannot we also raise money for peaceful purposes? And of course, that is because Chifley lost power, right? Okay, postscript. We're going to finish off by talking about the Whitlam years. Next, what's the next slide? Okay, so Labor was out of power for 23 years. And when they came back in, you are seeing the two guys that carried the flame of old Labor. And the one on the right isn't really them, isn't really it. Jim Cairns and Rex Conner. In the time they were out of power, Menzies had delivered on what he had threatened to do in 1945 when they were debating the Commonwealth Bank Act. He said, I'm going to strip this apart, and he did. And so the big thing he did is in 1959, he neutered the Commonwealth Bank by taking away the Reserve Bank function. The part that made it a national bank and gave it control over the banking system, took it off it, spun it off as the Reserve Bank and stuck the Cambridge-educated Malthusian Nugget Coombs in charge of it. Right, the guy who bragged that he stopped the post-war reconstruction projects. The other thing that happened under Menzies, if you saw our recent Australian Almanac on the question of the banking evolution in Australia, it was in this period that things like finance companies started, right? Which, you know, where parasitical banking was really let off the leash. I mean, it's not like the banks weren't parasites anyway, but there was some rules there were some controls on interest rates and things. And so to get around those controls, they set up finance companies where they could start pumping out money at really high interest rates that are way off the chart of anything to do with production, entirely usurious. And if you read that thing, this is what got Alan Bond started, this is what got Laurie Connell started, this is what got Christopher Skase started. The people who ended up, you know, wreaking such havoc in the 1980s all got started out of this. But we won't go into that, you can read that. Just before, as we referred earlier, when someone asked this question, just before the Liberals' time in office came to an end, John Gorton did this amazing thing where he set up the Australian Industry Development Corporation. And you guys all remember those press releases we put out where we talk about the debate at the time about resources and processing resources in Australia, so we're not exporting raw materials. And they used the Cabinet had this report on it where they used the figures of aluminium, right? And then if you exported 1 million tonne of bauxite, you got, in the late 60s, you got $5 million. But if you processed it into alumina and exported that, you got $27 million. And if you processed it another step into aluminium and exported that, you got $120 million. And if you processed it into aluminium products and exported those, you earned $600 million. So we were going without $595 million in aluminium alone, 1 million tonnes of aluminium alone, by only exporting raw materials, right? And this is what motivated John Gorton. He was an interesting person as a Liberal, and in the latter years of Jim Cairns, when he and Clyde Cameron were working with us on the campaign for a national bank, Cairns, who, you know, you older guys remember, he is like the arch lefty of Australian politics, Jim Cairns. Jim Cairns was saying to us, you guys should talk to John Gorton, right? You know, he was a Liberal. And we did talk to him, but he was a bit dottery by then. Yeah. But he did that because, see, what had happened in the 60s was Lang Hancock and Rio Tinto they really stepped up the raw materials exports out of Australia from iron ore in Western Australia. It really stepped it up. And by the way, just so you know, the Hancock Reinhardts today, all they are is a front for Rio Tinto, right? That's cut and dried. So John Gorton didn't like that. John Gorton, like with Black Jack McEwen, said, no, we need to keep as much Australian ownership and control and revenue. This argument about foreign investment, yeah, oh, that's great, all this foreign investment coming in, at interest, that means all the revenue goes out, right? The reason you have Australian ownership is because you keep the wealth here and that expands your economy and everyone gets the benefit. So these guys were very emphatic on that and they set up this mechanism, the AIDC, Australian Industry Development Corporation. It wasn't a national bank. All it was a mechanism whereby this agency could go overseas seeking funds on the government's credit rating, which means they would have had access to the lowest possible interest rate for money available at the time and use that money to invest in things like aluminium smelters in Australia, and to which they did. Gorton's critics told him, people like Billy McMahon, that if you set this up, you're creating a tool for Jim Cairns to socialise Australia. Which, if you don't take socialisation literally, it was true. Okay, the other thing I want to say before we get to these guys, they took power in 1972. The incident that more than anything else shaped their time in office happened a year earlier. The end of the Bretton Woods system in 1971. The turmoil of the Whitlam government is, to blame the Whitlam government for the economic turmoil in its time in office is like blaming a ship for a storm at sea, right? The storm was the end of the Bretton Woods system. The storm was the turmoil, the wave of deregulation, the unleashing of the City of London banks like Lord Jacob Rothschild and the Inter Alpha Group set out around the world to loot and plunder and steal. The geopolitics around the oil crisis and all that kind of stuff, that's what defined the Whitlam years, and they had to do their best in that context. Now, they weren't perfect, but the quotes I'm reading are from Jim Cairns' book, Oil in Troubled Waters. The reason I'm quoting him is because we knew him, and I personally knew him. I'm the one who kept talking to him. So you come to know a person and you see where their heart lies, right? And what really struck me about Cairns is he understood this question of national credit, and he understood the question of physical economy. And so I'll just read you some of these quotes in conclusion, and you'll see what made the Whitlam government, despite the other silly things that it did, such a threat to the money power. Cairns writes, I think, is there a quote on there? Yeah. It is obvious that in the minerals industry in Australia there is vast wealth that is owned and controlled by a few companies, and that the vast capital growth will accrue to foreign interests. If more of Australia was to be owned by Australians in some form or other, the minerals industry provided both the greatest justification and opportunity. What was to be done? Oh, I love this. But there was one minister, however, who was capable of scaring even the most experienced and coolest of the Australian capitalists, and even some English ones, not to mention the editors and sub-editors. He was Rex Conner. As Minister for Minerals and Energy, Rex Conner wanted to do something about it all. For him, the ownership of Australian minerals and energy resources was vital, and he believed that the Australian people should themselves own a fair share of these resources. Certainly, the Labor government of 72 and 74 did not intend to nationalise anything. The government believed that the people of Australia would be better off if they owned a share of, say, the oil and natural gas in Bass Strait, instead of it all being owned solely by Australian and American capitalists. Rex Conner certainly believed that it would be better for the people if they, and not only foreign or Australian capitalists, owned some of the vast reserves of gas on the Northwest Shelf, perhaps a petrochemical plant as well, and certainly the pipeline from Sydney and perhaps from the whole of populated Australia to Central Australia and the Northwest Shelf, through which billions of dollars worth of gas would eventually flow for 35 or 50 years. So Rex Conner had both the vision and the street smarts to actually achieve something in the Whitlam government. And Jim Cairns, I'm going to read you a quote here. Next one, please. What this quote shows you is Jim Cairns was prepared to do what got Labor in trouble before. Money, quote, he devotes a whole chapter of his book to how money is created. He goes, money is created by the Reserve Bank and by the trading banks and for their own requirements. The Australian government may borrow from this created money as it did during the Second World War. The Australian government in 74 and 75 could have used Treasury bills to borrow from the Reserve Bank to help finance the building of pipelines, the operations of the AIDC, and for other purposes, and this, as far as possible, I was determined to bring about." End quote. And when I interviewed him on it, I said, "Why didn't you pursue it?" And he said to me, "Because after 23 years of being out of power, virtually no one else in the Whitlam government had the stomach for the fight, right? And so because there was no support in the government for taking on the money power by using national credit, that's why they went further afield into what became the loan scandal," which, by the way, was probably a setup. Initially all it was because there was an oil price spike from the oil embargo, etc., and all these petrodollars floating around. You know, there was lots of money to be borrowed, and they got undertakings to do it, and it was pretty above board, but they got deliberately set up and run out of office. And of course, we since know that from early 1975, Sir John Kerr, who was an MI6 agent, a known MI6 agent, who should never have been appointed there, and this is one of these foolish decisions like Craig covered with the Theodore period, where while Scullin was sick and Theodore was in political trouble, the Lyons government reappointed Sir Robert Gibson, right, as the governor of the Commonwealth Bank. Well, this was a similar thing. Kerr should never have been appointed, but he gets appointed. He's an MI6 agent. That's what he was doing in World War II, right? And since World War II, he'd been hanging out with these fascists as well. So he comes in, and this lady who's just written this book on Whitlam, forget her name offhand, this latest book on Whitlam, because new archives have come out and she's got to go through Sir John Kerr's archives, from early 1972, he's meeting secretly with the judges on the High Court to plan how they're going to drum Whitlam out of office. In September, he goes to Papua New Guinea and takes Prince Charles aside, you know, and says, "Charles, tell Mumsy, this is what I want to do." And the problem is there's a grey area under our constitution because I'm actually an appointee of the Whitlam government, so we don't know that if they get wind that I'm going to sack Whitlam, whether Whitlam's going to come to you and say, "You should sack me." So we can't let this out, but if it gets out, tell Mumsy about it and see what happens. And so Charles takes that back to Buckingham Palace, right? And the Queen's personal private secretary writes Kerr a letter saying, "Well, you've got to understand we can't afford to be, you know, showing our hand too much in this. What we will do, though, is delay our response to give you time to execute the deed and get him out of there," right? And it's such a transparent, it's one of those things I was watching, I mentioned on the CEC report. I saw, there's a series on the ABC at the moment called Our Queen. Anyone seen it? And if you watch this powerless figurehead of a monarch who is purely symbolic is not without, everywhere she goes, she has a butler carrying a red suitcase. In that suitcase are the daily dispatches she gets from the British government telling her about the functions of government. Once a week, the Prime Minister goes and sits down with her for an hour where she can ask him anything she likes and he has to answer. He cannot hold anything back, right? And this is a woman, this happens everywhere. The only day that she doesn't have to go through the dispatches is on Christmas Day, apparently, according to this. So she is totally hands-on, and yet she's completely powerless. And then it went so far last year that David Cameron let her attend he didn't let her attend a cabinet meeting. She attended a British cabinet meeting last year, and this created a furor because some people said, like the lefties in The Guardian, "What's going on here?" And Cameron said, "Well, it's her cabinet. She can do what she likes," right? But this is, it's so, it's right there in front of you. I think the British have taken Edgar Allan Poe's as a tip. You know, if you want to hide something, put it right in front of their face, right? So her power is right in front of everyone's face. Oh, she's completely powerless. No, she's not. And this is what happened in this period. But it's transparently the case that the reason it happened was because of this intention that a couple of stalwarts in the Labor Party had. And the only other thing I would say is, as we've been hammering non-stop for a while now, that was the next time Labor came to office, there was none of this left. It was all gone. And we've published in the publications that the Campbell report demanding the banking reforms, in the list of Campbell report, they singled out every single financial institution that was owned for the government to demand that every single one had to be sold off, and Keating delivered on it, every single one. And then, of course, I didn't bring it with me, but my favourite book called Unfinished Business, Paul Keating's Interrupted Revolution, the author of the book, David Love, who writes it, who is a real groupie for monetarist economics. What jumped out of me reading this book is him saying that what Keating, a Labor guy, introduced in Australia was a vision to turn Australia into a modern Venice, an Antipodean Venice, where you hand over by force, you're forced to hand over your superannuation money to private fund managers like Macquarie Bank, who can create this pool of money like the Venetians did and slosh it around the world and use it as a power base from Australia, this Antipodean Venice. That's what we've been being turned into by a Labor government. And that's a tragedy. So it would have been much better if Chifley had not lost office in 1949. All right, we'll end there.
Robbie, this quantitative easing that has been going on the last 6 to 12 months by our own Reserve Bank, has that been created by Treasury bills from the government, and that's why it comes back to the taxpayer? Is that...
Yeah, there's a... look, it's exactly the same mechanism, except it's the Treasury bill mechanism with a difference. And the difference is the private banks themselves are being told by the central bank, you give us your paper, you give us securities for mortgages you've lent out or whatever, and we will give you money against them, which we create. So they've taken the credit creation part, which used to be limited just to Treasury bills, that could be then lent into the economy as well, that central banks have always done, and they're now saying, you give us your money and we will create money to pay for that as well.
But how does it come back to the Australian taxpayer? That's the sorry.
Oh, how does it come back to the...
How does it come back to the Australian taxpayer if it's just between the private banks and the Reserve Bank?
Oh, well, no, we don't know if our Reserve Bank's doing it. Up until recently, our Reserve Bank wasn't doing it. It was the Bank of England and Federal Reserve and whatever. But a couple of months ago, the chairman of the Reserve Bank here said that they're thinking about it. And where's Bertie? Has the dollar kept going down the last few days? Because we've had this really sudden slide in the dollar in the last week, and I wouldn't be surprised if maybe we are doing some quantitative easing. The way it comes back to the taxpayer is not through a normal accounting way, but the Reserve Bank of Australia is an interesting institution where it's not publicly controlled, but it is publicly owned. Unlike the Federal Reserve System in America and the Bank of England, they are privately owned central banks, right? And privately controlled. Ours is privately controlled, but it is publicly owned. And so its losses, the Australian taxpayer at the end of the day stand behind. But because it's a central bank, it's not really going to make losses like that. That's not really the issue for it. We just have to back up what it does.
Well, Robert, I had a few questions from the previous session, but I suspect that some of them have been answered. However, one question I guess I'm constantly dealing with, particularly when we talk about national sovereignty and a national bank, is I'm always getting to, well, what's it going to look like? I mean, doesn't the Reserve Bank do that? Always, that's what I'm getting. And hypothetically, if we say, like, tomorrow, the National Bank is up and running, now we have a Federal Reserve and we have the Reserve Bank, how will this look? What will this look like? Because I think the general population, and I don't know whether in this room somewhat we feel the same, and I think after watching this, we feel that the black hole is about to suck everything all the hope that we have for a national bank right into the black hole, as we see it from what's been happening, all the skullduggery and the nonsense that's been going on. I mean, clearly, as history has demonstrated, on many occasions, both in ancient history, as far back as the independence of the United States of America, right through to our own recent history with war reparations. How is this going to look?
Yeah, well, in the latest New Citizen, we tried to be as explicit as we can about it, but it's also in our book. The Reserve Bank will become known as the Commonwealth National Credit Bank. It'll have a change of name. It'll have branches put up right around Australia, like the old Commonwealth Bank did, this new CNBC. It will become a bank that the federal government, the state governments, and all the local governments will instantly put their deposits in, instead of a lot of this rubbish. I mean, I'm on the board, I'm on the school council of Adrian's primary school, and the school council has to have money deposited in special reserve accounts in banks, right? Because that's the way the government structured education funding nowadays. It's got to be kept there for a rainy day. Well, that shouldn't be in the Westpac Bank. That should be in the government bank, right? So there's lots and lots and lots of government, public hospitals, etc. in the bank accounts. All of it should be in this new Commonwealth National Credit Bank. So instantly it will have a lot of money. And then everyone can line up. Councils, state governments, federal government. You set up big projects like the Snowy Mountain Scheme style things. You set up an authority that will manage that. That authority will be empowered to borrow from the bank. The existing municipal governments, etc., they can go to the bank and say, let us borrow what's essentially their own money back, but they're not losing it as deposits by doing that, right? And they can build the infrastructure they've been putting off for so long. This can start instantly with that. And that's without any kind of special Treasury bill creation of credit on top of that, right? It will have all the powers to do that as well. So we can expand the economy at will if the resources and manpower and that are available to do it. The difference with that and now is the Reserve Bank only plays this Treasury bill role if in coordinate. The thing with the central banks and quantitative easing is they're not doing it in consultation with governments. They're doing it in consultation with each other. That's a system that sits like a web above the world that no government is not accountable to any government at all, right? And they decide whether they're going to contract or expand the money supply. So that's terrible. We're not going to do that. The other thing the Reserve Bank does, if it uses Treasury bills for deficit financing at the moment, and it might do a little bit, possibly not, because a lot of people want to buy Australian government bonds, so the Australian government probably gets to sell lots of bonds at the moment. If they do that, that's all they do, right? That's the only role of credit creation in the economy at the moment. Well, we don't want to make it that. We want to leave that system of being indirect and incidental and make it a deliberate policy of utilising that power for the good of the economy. That's the difference. So it's what I said this morning. The difference is intention, right? Not having some independent system set up on the side that just does what it likes.
Look, I just wanted to make the point, Chris, is that when I said in the introductory remarks with Helga, is we're going to create a revolution, right? You're not going to get a piecemeal approach to the current crisis. I mean, the entire system is in the process of disintegration. So we have to put a clear clarion call out, which is what we do with that last New Citizen. This is what you've got to do. Here's the legislation. Understand it. And the thinking people in our community will read that legislation and it'll provoke them. It'll provoke them into a discussion, which we've got to get into. Now, this is our method. It's been our method since day one, since being involved with the LaRouche organisation. And I've had discussions recently with people that say, look, Craig, I really love your discussions on the British Empire, on the credit system, but why do you have to attack the Queen in the first sentence of the paper? It puts people off. Well, there's a certain fallacy of composition if you don't do that, because you're actually lying about what you stand for, because you're falsely packaging what you stand for. If people don't like it, that's good, but you've told them the truth. So it's the same thing, and like what Robert was saying, 25 years that the Labor Party was out of government. We've had maybe nearly 2 generations of people who don't understand anything. We've got one complete generation that has got no clue about anything. You think about the introduction of economic rationalism in this country in the 90s. Well, there's that one whole generation that accept economic rationalism as the way to go. So we have huge political battles, but we have to be very clear on the clarion call. That's what the new citizen represents. And the more you get people to freak out, in the sense that you know you're on the mark, but you also find that those people that are in a tough position want to hear the solutions, even if they're tough, because the current system ain't working. It's going to get worse unless we turn it around.
The whole generation might learn something.
Where do the community banks stand in comparison to other ordinary banks? Because in country areas there's a lot of...
Well, that's all they've got, really, is the community banks. I was just wondering.
Like the Bendigo Bank. Yeah, they're a bit of a fraud, really, because, you know, I think the whole system has to be overturned. But it's not much to worry about. You know, the government, with what we're proposing, the government will take charge of the banking system, and everyone's deposits will be, you know, and banking services will be protected. But the community banks are a particular fraud because, one, Bendigo Bank and the others, they're owned by the same investors who own the other banks.
Is it?
Right?
Yeah, that was one. I was wondering about that because it just seemed to be, well, you know, what do you...
Well, it's a way to con local communities into subsidising the actual banking expenses, because in most cases the local communities put up the building, subsidise the wages for the staff, etc., because they're so desperate to keep a banking service. You know, that when the Commonwealth Bank, all the bank branch closures that caused so much turmoil in local towns, they all happened after the Commonwealth Bank was sold. Even when the Commonwealth Bank was just being another bank, when it was government owned and it provided a service, it forced the private banks to compete with it. Right, and every bank had a branch in every town, you know, in most towns.
So really, banks like that they're really backed by another bank, are they?
If you look at, you get the annual reports of banks, and you go to the top, each annual report has a list of the top 20 shareholders, and they're all these nonsensical names like Chase Manhattan nominees and Prudential nominees and Westpac custodian nominees, and what nominees means is it's pools of investors who can pool as a nominee group and keep their identity secret, right? But the top 20 lists of all the banks are all the same lists, right? It's the same funding groups that own all the banks. The cross-ownership of the... Yeah, they're not different. The cross-ownership is totally incestuous, but you think you're dealing with separate banks. You're not really. Well,
Morris.
That's right.
Morris, got a question.
Morris?
In 1957 in Queensland, we got together 22 properties and we wanted to pump water from the Dawson River for 30 miles. Now, Joe, rest his soul, said, you guys go for it, we'll give you $1 for $1 every dollar you can raise. Well, at that point, the commercial banks in Queensland had to show on their books 33% of their lending to government and semi-governmental bodies. It was cut and dried. And I doubt if it's there now. Well, we just went ahead and we built a vast thing. It's still very operational. And by 18 years of that, because of the increase of the value of the properties and the production that we got off it, we all got together in 18 years over a 25-year loan and said, no, we'll pay this out, and we did, and that was it. So, you know, that's only a small section, but it's only money being used. And the other one statement, you and Joanne's, it was nice to hear, you know, the connection of the early colonies of us and America. We had a whole heap of political prisoners under the guise of the Anglophiles. We didn't print the money. We had rum as our currency, but it's just sad to see the difference. The Yanks fought them 3 times. We never bothered around getting around to it to get rid of them. But with the iron ore over there, they built them for, couldn't make horseshoe nails, whatever. Well, here with us, in the Bretton Woods Agreement, this is the one that gets up my nose, where they gave Monsanto and the cartels the control of the world's grain, and that gave them the control of the world's credit, control of grains, and there was only oil left, and great fight. But to me, that Bretton Woods thing was quite a disaster for the farming and the food industry, which I've been in all my life. So I'd like to, well, just a little example for people that are not on properties. For me to sell sorghum seed as a grain, around $150 a tonne, I'm compelled to buy the cartel seed because they've got total monopoly. We're talking $4,000 a tonne. And corn and everything, they've got total control, except wheat. Wheat is hybrid, but there's still, we can keep our own wheat seeds. So yeah, I'd just like to mention that grain one. That's a power base, don't worry about that one.
Yeah, yeah. Captain? Hello?
To bring the Bretton Woods system down, wasn't it the British speculating on currency? Because you weren't allowed to do that. And was that...
What the British did is they started speculating on gold. You weren't supposed to speculate on gold because the mechanism at the heart of Bretton Woods was $35 to 1 ounce of gold. And because America got sucked into things like the Vietnam War, which they never should have, right? But that's where the assassination of Kennedy was an important turning point. These wars are expensive things. And an easy way to finance a war is by printing money. But by inflating the US dollar, you were creating a potential problem with the Bretton Woods mechanism. That was okay as far as it went. They could have got away with it possibly, but the Brits were part of the setup. And so I think it was in '66, the British allowed gold trading in the City of London. Of course, the only purpose to trade something is to manipulate its price, right? And so gold in London started going up. And when gold started going up, the gold that was regularly being shipped from countries to Fort Knox, because they were happy for it to be left there as part of the stability relationship between the US dollar and gold, started going to London instead. And a parallel thing was when they got people like Jim Wolfenson, the former president of the World Bank, who was an Australian. This is one of the things that he got started off in finance. He was over there working for Sigmund Warburg, and they started what they called the euro-dollar market, where they started hoarding dollars in Europe. They did the very thing that King O'Malley quote I read about the Specie Resumption Act, actually. It was the same thing. They hoarded dollars in Europe, and when they had enough of them, they knew that they could bring down Bretton Woods because they went to America and said, these are dollars, we want the $35 an ounce thing in gold. Right? You should be able to pay us gold for these dollars at that $35 an ounce. And they knew full well that America couldn't. And that's what created the crisis of the Bretton Woods system, that you had this Mont Pelerin guy from the Chicago School of Economics, Chicago University. What's his name? Anyway, he was the deputy Treasury secretary, and he's the one who said to Nixon, we've got to end this. And they ended the gold. They took the dollar off gold then and busted up the Bretton Woods system. So it was a total setup by the people who had opposed it from the beginning. Well, John said, wouldn't it be breaking a treaty to start trading in gold? I don't know, but if you take oil, right? Recently, I think it was in the early 2000s. In America, you cannot trade in oil futures unless you're an oil company. So the Brits said, come here and trade. And they let the banks from 2002 or something, or it might have even been 98, something like that. They opened up a market for trading in oil futures in London that you could trade in if you weren't an oil company, right? And of course, what happened? That's when the price of oil started going spastic and sorry, not allowed to say that anymore, started going haywire, and the big mergers started between the oil companies. So this is what the Brits do, right? Remember, their whole system is based on exploiting differences in value, but often they've got to create those differences. It's arbitrage. Buy cheap, sell dear. If I heard Andrew Bailey sitting in the corner of the phone room once, I heard him a million times. The British, they buy cheap and sell dear. Yes, John.
Just wondering, just the whole national credit thing, like, there's a lot in it, but isn't it just as simple as the government saying, we're just going to create this money for this project? You know, like, why do you need to have your money invested in council? Why do the local governments have to put their deposits in the National Bank? Why is that important?
Well, look, you want to be able to maintain control of the system at the same time. The government, it's no point the government setting itself up as a pump of money into a financial system that it doesn't have any influence over, right? So, yeah, part of it is to maintain control. If you control all the government bodies, they bank with you, etc., you're doing them a big favour, but you become the biggest player in the financial system. That's very important.
I don't know if you saw, Robbie, but the International Consortium of Journalists recently did a study on the offshore banking. They concluded that 1/3 of the world's wealth and 1/2 of world trade is conducted through offshore banking, which is secret. So it's quite a lot of money, and if you're talking about control over the system, there's something.
Well, see, again, just to speak, Elisa mentioned this mechanism called the Long-Term Investment Club, which we'll be writing more on in the coming period, which is talking about controlling, what, $4 trillion worth of funds, you know, for equity funds and so forth. I've got this on, Aaron. People can't hear.
I think I can hear.
You can hear?
Yeah.
But the point is that it's the same principle. Look, you've got sovereign governments ceding the right of the control of the credit to private corporations, and one of the members of that long-term investment club is the Queensland Investment Corporation that controls all the funding for local governments and so forth in Queensland. So here you have a supranational body now controlling $4 trillion of capital, and they're boasting to go to $21 trillion worth of capital. This capital is literally floating around the world, hunting out public utilities to buy up all around the world. Like Canadian pension funds come in and buy Australian infrastructure, right? So what happens is that the capital, this money, comes in and literally controls the very destiny of the citizens of Australia. So there's no, the government doesn't control the monetary system. So what we're proposing is that, hang on, this is exactly what Ted Theodore was proposing with his Reserve Bank bill. It's the same thing that Chifley was fighting against. A government must be sovereign with its money supply and also control over the money. If you don't have that, you don't have a country. And that's the danger right now, is that the oligarchy knows this. They know there's a huge amount of liquidity out there, up to 21 trillion they're talking about pooling. And these capital flows, I mean, you're talking 21 trillion, that's more than the gross domestic product of entire groupings of countries, not just single countries. This is enormous power. So therefore, the only thing that can beat that is where you have currency controls and foreign exchange controls and say, your money's not coming in here. We're not going to allow your company to come in here, and that means control top-down by the government through legislation and so forth. And governments can do that if it's done on the principle of the general welfare. Yeah. So, yeah, foreign currency controls. Look what Mahathir of Malaysia did in '98, I think it was, after the LTIC crisis and so forth. He said, no, he listened to LaRouche, he said, we're not going to allow this. So he put currency controls on and actually saved Malaysia from a great deal of suffering because he had the guts to do that. This is the fundamental issue. It's going to come down to either we have a global collapse of civilization down to 1 billion people, or we actually fight for a global Glass-Steagall where these currency controls are part and parcel of the new regulation of the banking system, where you basically separate out the commercial banking system, you protect it through government legislation, you make sure it functions. The rest, ta-da, we don't need you. Your capital is useless in this system. Now that takes a lot of balls, and no other political party, no other movement in this country is even talking about that. So, you know, we might be a small force down here, but boy, we get heard. Whether they act is another matter.
Just in regard to Argentina, because at the moment, you know, the peso is actually being devalued. But I think the Kirchner government's put some currency controls in there, so if we're probably going to do the same sort of thing. So how do we defend against, you know, devaluation of our currency when you've got the whole world, essentially, well, the whole empire against you?
Well, you've got to fight it globally, because that's the difference between us and Chifley. We know the British question really well, and that's why we're part of the LaRouche movement. Every nation has to go in this direction. There is very limited things that one nation on its own can do. Right? That's just a reality. So you can't complain about the time you were born in. This is not a local council fight. This is not just a national fight. This is now a global fight. We're fighting for the era, go back to the institution of sovereign nation states, which is not just for us, it's for every nation state. So we're not just going to win an election on national banking and leave it there.
And I think that's an important point by Robbie. I mean, look at how many people are in this room now. We need candidates in every part of this country to simply do one thing, stand up and say, I represent the policy of the Citizens Electoral Council, Glass-Steagall, national banking and infrastructure development. It's the simplest fighting platform that we've got. It's the most easy in a sense to talk about, because all the material we're going to be producing is as a constant information flow around those policies.
And it's not easy because we've dumbed it down. It's easy because that's all that matters.
It's all that matters. It's simple. There's nothing else. And all the other policies, well, they'll become side issues, because you have to redirect people back out of the side issues back to the reality of the situation. So, you know, over the next month or so, maybe earlier, we want to try and develop as many candidates as possible for our movement, and, you know, talk to the phone team members. Please join the Tuesday night calls, because if you think you're inadequate, you don't get enough information or whatever, well, that's good discussion to have with your peers, because I can guarantee if you think that way, a dozen others do too. And that's why we do those calls. But we actually represent real power, because we're thinking in the realm of what is coherent with natural law. Right? If we don't, no one else is putting these policies forward, and bet your boots, we are heard everywhere, because there's a deafening silence coming from everywhere else. Now, the people may not like us, they may react, they may throw up, I don't really care, but the point is that, you know, it's not their personal opinion that matters. It's what's happening to the country. You know, what's the future for the generations of kids and so forth that, you know, all of us in this room have committed ourselves to fight for. So that's the bigger issue at stake. And I mean, these guys here, I mean, I might take him off, I don't know where he is at the moment, but I know that these other guys all have put that issue on the line at some stage. If you want to know more about it and get a sense of it, there is a DVD of the presentation I gave called Red Ted and the Great Depression. It's the full version. There were these clips I took out of it. And there's also another one there about this guy, Jesse Jones, who was the guy that ran the Reconstruction Finance Corporation for 12 years. Brother, can you spare $1 billion? It's a very good DVD. If you buy the video pack, you know, the pack of my panel, and if you buy a complete video set of the conference, you'll get this in it. Otherwise, I think there's about 6 out there that you can buy. You better be quick.
Well, we've got a question over here from Wayne.
Thanks, Robbie. Yeah, I mean, like, I know everybody struggles with the concept of a monetary system versus a credit-based system, and like, even the administration prior to Roosevelt actually had the opportunity to use, you know, this credit-based system, but they used it on speculation. So, it is not the most important thing, you know, like, as you touched on before, the intent. And how do we ensure the intent remains for nation building and not speculation?
Well, that comes down to the leadership. There is no other way of talking about it. I mean, in 1932, when you had 24,000 banks and I think 14,000 were basically bankrupt, the knee-jerk reaction by Hoover was to create the Reconstruction Finance Corporation and lend money to the banks, right? But the problem is you had to lend money to banks that were actually functional or had good Tier 1 capital. And of course the banks, because they're bankrupt, they didn't have that, so therefore the whole loan process didn't work. But the intention when Roosevelt came in 1932 right, and then in 33, was the intention of using credit to mobilise the resources of the economy that were still intact, that was still there, but actually put it to work. And there was actually very few restrictions on the amount of where that money could be lent. It couldn't be lent to churches, right? It couldn't be lent to foreign countries, and it couldn't be lent to political parties, right? For obvious reasons. But
however, you can lend to us.
It lent $50 to the local, $50 US to the local person on the street via its networks to do some job. I haven't got the exact predicates for that, right? Or it lent $5 million. The difference between what Roosevelt did and what Hoover did is that Roosevelt allowed the Reconstruction Finance Corporation to buy what was called preference shares in the banks. So if a bank was in trouble and it looked like it was okay in the sense of the general structure, they would go in and buy, $10 million worth of preference stocks. So the government actually owned that bank. And this freaked them out a fair bit because this was socialism in America. The government was owning private banks. But the intention was never to hang on to that stock, but to use that credit or give the bank access to that credit in order to be able to loan it out to the public, to keep the mechanisms of all the entire banking system operational and stop the shutdown of the banking system. That was the intent of that. Now,
but he was still restricted, wasn't he? Because he had the Federal Reserve System in 1913.
The Federal Reserve System the Federal Reserve System was sidelined under Roosevelt. It could not function. It was actually set up to try and deal with this sort of system, but it couldn't. It just could not do it. So the Reconstruction Finance Corporation, lent money into the economy via the banking system. It bought out entire railway companies, right? Not in the sense of buying them out physically, but it said, okay, we're going to buy out your preferential stock. And there's a tremendous story about this guy, Jesse Jones, which you'll see on the DVD. He just said, okay, yeah, we'll buy 5 million of your preference shares, but where do you live? Oh, we live in New York. He said, but your rail system's down there in South Carolina. If you want the loan, all your executives are going to go down and live where your railway system is. You're not going to live up in New York. Go down and work your company properly. So he not only, through the Reconstruction Finance Corporation, he not only lent the money, but they actually had a sense of directing the way that money would be injected into the economy. So this question of intention that Robbie mentioned before, right? Roosevelt's intention was to mobilise the resources for the general welfare of the population in accordance and in sync with the idea of the general welfare clauses of the American Constitution.
We can write that into the, like we can create the credit system and that sort of banking system, but all it takes is for one of the Queen's men and it all falls over.
That's why it's a political revolution, Ray. One's just saying that, we can do all of this, but it only takes one of the Queen's men for the whole thing to fall over. That's true. That's why it requires a political revolution to do it. And, that's
and also a cultural revolution, which is where the Cusa falls into it, because if the whole idea and the intention of, of humanity is for the interests of humanity, then you'll form the system that actually develops and nurtures that. And when we've got a higher level of culture and understanding of that, then that becomes the measure and the control over the oligarchy.
Yeah.
My little bit.
Hear that, you atheists? If you want a national banking system, you need to master Cusa. Yes, Phil, I'm looking at you.
I was just going to add to that, because on the EIR report, the LaRouche show, Bruce Director has done a really good report last week or so, and he said Plato first talked about democracy, which is what the basis seems to be for humans have free will, but it was how that free will was going to work in the best direction. Then he mentioned how Cusa got closer to that, and of course this is raising the level of the culture or of the expectation of people as humans. And I've heard it mentioned to me by the annals I've been around with Jan and others, that that's what we have to do. We have to raise the level of thinking of the people, and that's the way as even Washington, he said, I give you a republic, but you've got to keep it. So, and Gandhi said the same thing, we can't have independence because we don't demand it yet.
Yep, and it's yours.
So that's it for this week's CEC report.